Have you ever wondered how a robust economy can suddenly spiral into a financial crisis? Indeed, the unpredictability of economic downturns can be as fascinating as it is devastating. Take, for instance, the Argentina financial crisis. Once a beacon of prosperity, it found itself in the throes of an economic catastrophe. One may ask, what caused this? What were the triggers that led to such a dire situation? Today, we're going to unravel these questions. So, buckle up as we delve into the causes and triggers of the Argentina financial crisis. To understand the crisis, we need to rewind to the late 90s. Picture Argentina in the 1990s. The country was under the influence of an economic strategy known as the convertibility plan. This plan pegged the Argentine peso to the US dollar at a 1-to-1 ratio, aiming to curb the hyperinflation that had plagued the country in the 1980s. It appeared to be a success initially as the economy stabilized, inflation fell, and foreign investment flowed in. However, beneath this facade of prosperity, problems were brewing. The fixed exchange rate made Argentina's goods and services more expensive compared to those of their trading partners, which resulted in a significant trade deficit. As the country was importing more than it was exporting, it had to borrow heavily to finance this deficit. The public debt started to balloon, and with the peso pegged to the dollar, the government had no flexibility to devalue its currency to manage this debt. At the same time, the government was running high fiscal deficits. Public spending was out of control, and tax revenues were insufficient to cover these expenditures. The government resorted to borrowing to finance its spending, further exacerbating the debt situation. Moreover, the global economic landscape was not in Argentina's favor. The late 90s were marked by a series of international financial crises, such as the Asian financial crisis in 1997 and the Russian financial crisis in 1998. These crises led to a reduction in capital flows to emerging markets, including Argentina. As foreign investors pulled out their investments, the country faced a severe shortage of foreign reserves, making it even more difficult for the government to maintain the peg with the US dollar. By the end of the 90s, Argentina was in a precarious situation, with its economy on the brink of collapse. The country was caught in a vicious cycle of high public deficits, escalating public debt, and dwindling foreign reserves. The stage was set for one of the worst economic crises in Argentina's history. The turn of the millennium brought the triggers that sent Argentina into a full-blown crisis. As the calendar flipped to the year 2000, the economic storm clouds were gathering over Argentina. The withdrawal of international support was one of the first sparks to ignite the crisis. International financial institutions and foreign investors began to pull out their investments, leaving a gaping hole in the country's economy. This sudden jolt to the financial system compounded the already existing issues within the country's fiscal and monetary policies. The next trigger was the devaluation of the Brazilian real. Brazil is one of Argentina's main trading partners, and the devaluation of the real led to a significant decrease in the competitiveness of Argentina's exports. This further strained Argentina's economy, leading to increased unemployment and decreased domestic consumption. However, the death knell for Argentina's economy was the inability of the country to service its public debt. Argentina had been borrowing heavily from international markets to fund its fiscal deficit. But with dwindling foreign exchange reserves and a shrinking economy, the country found itself unable to repay its creditors. This led to a default on its debt, causing a catastrophic ripple effect throughout the economy. These triggers came together to create a perfect storm. Argentina's economy, once seen as a beacon of prosperity and stability in South America, was now teetering on the edge of collapse. The government's attempts to stabilize the situation through austerity measures only served to exacerbate the crisis, leading to widespread social unrest and economic hardship. By late 2001, Argentina was in the throes of a severe financial crisis. The country's economy was in freefall, and the people of Argentina were bracing for the impact. But this was only the beginning of a long and painful journey that would profoundly shape the country's future. The financial crisis had a profound impact on the lives of Argentine citizens. As the economy spiraled, the fallout was felt in every household, every street corner, and every business. High unemployment rates became the norm, as companies, grappling with economic instability, downsized or shuttered their operations. The job market turned into a battlefield, where only the fittest could survive, and even then, survival was not guaranteed. The crisis didn't stop at the job market. It seeped into the stores, the markets, the places where people used to buy their essentials. Rampant inflation meant that the price tags on goods were constantly changing, always edging upwards. Suddenly, the necessities of life became luxuries that many could not afford. The Argentine peso, once a symbol of national pride, lost its value, and with it people lost their purchasing power. The economic turmoil quickly spilled over into the social sphere. The streets of Argentina became arenas of protest, where citizens, fueled by frustration and desperation, voiced their anger and disappointment. The social unrest was not just a reaction to the economic hardship but also a cry for change, for a better and more stable future. The human cost of the crisis was immense. Beyond the numbers, the statistics, and the economic jargon, there were real people whose lives were turned upside down. Families were torn apart, dreams were shattered, and the fabric of society was strained to its limits. The crisis also took a toll on the mental health of the population. The uncertainty, the stress, and the constant struggle to make ends meet left many grappling with anxiety and depression. Mental health issues, often overlooked in the face of economic challenges, became another silent crisis within the crisis. The financial crisis left a deep scar on the Argentine society. It was a period of hardship, of struggle, and of profound change. But it was also a time that showcased the resilience of the Argentine people, their ability to endure, to adapt, and to hope for a better tomorrow. It was in many ways a testament to the human spirit's ability to withstand even the harshest of storms. The regulators and political leaders were faced with the daunting task of navigating through the crisis. As the financial storm raged, regulators were forced to take drastic measures. One of the most controversial steps was the freezing of bank accounts, a move that sent shockwaves through the economy. Picture this. You wake up one day, and your life savings are locked away, beyond your reach. This was the reality for many Argentinians during the crisis. The decision to freeze accounts was seen as a necessary evil, aimed at preventing a total collapse of the banking system. Meanwhile, the government made the bold move of abandoning the dollar peg. This was a significant shift in policy, as the Argentine peso had been tied to the dollar for over a decade. It was a risky move, but one that ultimately allowed the country to regain control over its monetary policy. The crisis also left its mark on Argentina's political landscape. There was a high level of political instability, with several presidents taking and leaving office in quick succession. This period saw the rise and fall of leaders, each attempting to steer the country through the turbulent economic waters. Political careers were made and broken during this time. The crisis sparked widespread protests and civil unrest, leading to a shift in the political balance. The people's dissatisfaction with the handling of the crisis led to the rise of new political figures who promised change and recovery. However, the crisis also led to increased scrutiny of political leaders and their policies. The public demanded transparency and accountability, leading to significant political reforms. The crisis reshaped Argentina's political landscape and left a lasting impact on its financial sector. It was a time of great challenge, but also of change and opportunity. The lessons learned from the crisis continue to shape the country's financial and political strategies today. Fast forward to 2023 and the scars of the crisis are still visible. Argentina's economy has been on a slow but steady path to recovery, fueled by a combination of domestic reform and international aid. The government has implemented stringent regulations aimed at preventing such a catastrophe from recurring. These measures include tighter controls over banking activities, increased transparency in government transactions, and a renewed focus on sustainable economic growth. Yet, despite these efforts, challenges persist. Inflation remains a stubborn adversary, eroding the value of the Argentine peso and making it difficult for households and businesses to plan for the future. The country's public debt, although reduced, is still a significant burden, inhibiting the government's ability to invest in critical sectors such as education and infrastructure. Argentina's economic landscape has been reshaped by the crisis, with a greater emphasis now placed on risk management and financial stability. The country's finance sector has become more resilient, but the memory of the crisis serves as a constant reminder of the importance of prudent economic management. While Argentina has come a long way since the crisis, the journey to full recovery continues. The Argentina financial crisis serves as a stark reminder of the unpredictability of economies. It underlines the importance of understanding the roots of such crises, from irresponsible lending and borrowing to the sudden triggers that set off the financial downfall. The repercussions on citizens were harsh, leading to widespread poverty and societal unrest. Yet, it also brought about significant political change and regulatory responses. As we look at the state of finance in 2023, we can see the lasting impacts of such crises. If you found this video insightful, please like, share, and subscribe to our channel for more intriguing discussions on finance. Thank you for watching.